Hey everyone, Dan here. We are just before market close on Tuesday, June 29th. Today we're going to take a look at Digital Turbine. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also feel free to comment below with your own thoughts, ideas, questions, ticker suggestions. This ticker came as a suggestion in a comment on a video. So those things help everyone, not just myself, but everyone who sees the video after you. Okay, so apps, Digital Turbine. I wasn't super familiar with the company. I had heard the name before, but as a refresher here, or if you're unfamiliar, they're engaged in delivering end-to-end products and solutions for mobile operators. So these folks can monetize mobile content. All right. So heading back to the chart here, so to just sort of get our bearings, and we'll spend most of our time today on the charts, and then we'll go over a little bit of data, but it'll mostly be the charting. So I'd like to first set some price targets that we could look for as potential dip buys to the downside, and then potential price targets to the upside that you could either use to trim your position, take profit, or dip buy into price strength. And we'll talk about that as we get into it. So in order to plot these price zones, I'm going to look for areas of historical buying and selling pressure signified by bottoming out and topping out. So bottoming out here indicates there was really significant buying pressure in that area, pushing the price up. Topping out here, as you see happened here and here, signifies that there's really strong selling pressures. A lot of folks willing to sell and take profit at that level, pushing the price down. So I'm going to look for areas ideally that encompass both, but if not, they should at least catch one or the other. So here's a strong zone down here. I don't know, I'm just starting low. I don't know or think that Digital Turbine will drop down this low, but you see previous support here and here in all these areas, and then previous resistance over here, recent resistance here and here. So pretty solid zone there. So I would expect that to be a really strong stop loss kind of zone, because I would expect it to hold there. And if it doesn't, there might be some additional pain coming that you might want to consider watching out for, depending on how risky you want to be with this one. 71.74, because that is pretty tight in to the 69 level. You could treat that as a cautionary zone, hey, maybe raise your antenna up if you see it dropping below this price, because we would have expected it to hold. 76.10, you see resistance here, and here. You see resistance here. You see resistance turning to support here. Resistance, support and resistance, support and resistance turning to support. So that's the tightest to the current price, which is 77.68. So I'd look for it to bounce there if it does dip down. Otherwise, you might see it falling down, toward the lower 70s as it tries to kind of catch its footing. On the upper side of things, 80.27 makes sense to me. See the resistance, support back in here, support back in here. So that could be an area to look for to the upside if you are looking to trim, take profit, what have you. Trim just means, if you have 10 shares, you might sell 3 of them there and keep the other 7 to kind of let your winner ride if it's going to continue to ride. These are the additional price targets that I would look for to the upside, and we might. It's such an obvious one. We might as well include this right about here. These are the ones that I would look for, and I was mentioning also. So not only looking at maybe that 76.10 to dip buy, or 71.74 to dip buy if it shows that it's bouncing or showing some price strength there. The other thing that I had mentioned was dip buying into price strength. So let me just explain what that is. So right now, maybe you're saying, there's been a little bit of, red activity happening. So I'd like to see a true show of strength from apps before I'm going to take a position. So maybe what you look for is for it to bounce on this 76.10 area and make a run up, regardless of how long this takes, toward that 83.96. And if it makes an approach at 83.96, even if it rejects off of it initially, you'll feel that it's showing really significant price strength and will be interested in potentially buying at a dip at that point. So then what you do is you look for it to roll back down, get rejected off of that, hypothetical resistance zone, come back down towards support at 80.27, and start buying in as it's approaching that 80.27. So I would leave yourself some wiggle room is what I always tell people. And the best way to do that, if you want to be like objective about it, is throw up your ATR indicator and see the variance in the price right now. You have 1.36. So, right now you could set your limit buy starting $1.36 above 80.27 if it was coming down into that, because it may only get that close to 80.27. I even use it a little bit more liberally. If it says 1.36, I would do like 1.5 or something like that, just in case it doesn't dip that much, like especially if there's additional price strength involved. This could be sort of skewing that ATR higher than it was previously. So that's a way to dip buy into price strength, and you just choose any target to the upside and look for it to bounce off of that first support zone that it should be hitting as it starts to cool off. And as you see, every run-up cools off no matter what stock, it doesn't matter. AMC, GameStop, those are included, runs up, imminently cools off. Consolidates for a little bit, runs up, and cools off. Consolidates for a little bit, runs up, cools off. Didn't consolidate in this instance, ran right back up, but then cooled right back off. And this one was even sort of harsher because it didn't wait to consolidate. And so although it ran up and made a higher high, which probably fooled a lot of people, that trip back down was more detrimental because it then superseded the previous low, dipping down lower before recovering a little bit. But it is good to see those dip downs and consolidations. It keeps the price moving in a bit more predictable fashion. Nothing in the stock market is truly predictable, but in the sense of like, you can't ever say, hey, tomorrow this is going to be $80. That's just weird, predictive crystal ball territory. But what you can do is you can give yourself the best probability setup possible by pulling in as many factors as you can accumulate and saying, I think it's likely to do this. Then you're working in a hypothetical situation, but it's an informed hypothesis. So you're still sort of like engaging in a prediction, but it's more of a trial and error. I'll see what it does when it gets there, but here's what I think it's going to do. But you always need to make sure you're watching what it does when it gets to the price point that you're interested in, to say, is it doing what I thought it would do? And if so, what does that mean? If it means that you should be triggering a buy, triggering a sell, whatever, then you should stick to that plan. Okay, so these are the price targets that I would just stick with for the time being, even though this is a relatively, this was a 6-month chart that we were looking at. But, these for a $77 stock, these are pretty good price targets. They're not super far apart. They're not super tight in. Everything is a few dollars apart from each other, and that's a good spread to work within. I did want to zoom in a little bit because there is potentially sort of like I would call it a rechannel type of play that's maybe surfacing here. And just talk about, it's probably a smidge too high. Okay, let me just talk about, I think it's still a smidge too high. Okay, here we go. All right, so let me just talk about what a rechannel is. A rechannel is basically a stock that was in a channel, briefly fell out of it, which on a time frame like this, all of these candlesticks are 4 hours. So that being, a few days here, or maybe a trading week, considering that it's been in this channel since May 11th, isn't that big of a time period leaving the channel. So basically what it does is it was in this channel, it had confirmed this channel, and then it fell out, and then it immediately, in quotes, within a short period of time, re-entered that channel and re-established within it. Now what we're waiting for is the latter half of that statement. We're waiting for it to re-establish back in this channel. And by establish, I mean we want to see it testing the bottom, and then running up and testing the top, and then testing the bottom, and then testing the top. And so it has done that several times here. And this is a near run toward the top. So I would include that, like anything that gets very, very close to the top or the bottom, I consider testing that area. It's not always an exact bounce off the line. You're in a little bit of a cushion or a zone there. So you have to have a little bit of discernment with these things. And now, it's coming back down toward the lower half of the channel for sure, but if it does reestablish back in this channel with a nice clean bounce off the top or the bottom, or both ideally, this is a relatively steep channel to be moving up in. I mean, this would put this stock even just mid-range at about 83.5 by July 7th, which is really soon. So I would look for that as a potential play pattern, and the way that I like to play channels is buy the dip at the bottom, take profit if that's what I'm looking to do at the top of the channel. Rinse and repeat. Wait for it to come back down to the bottom, buy it up, and take profit at the top. Wait for it to come back down, and so on and so forth. Just keep in mind, all channels eventually break. So like this could have definitely made you think the channel was breaking. Now what you would have noticed if you had been patient would have been that it started to consolidate, and then you'd be wanting to see what the next move is. It's consolidating, so it's moving away from the channel, but then does it make a big move within a few days time? That's big up or big down. Big up, it could be going back into rechannel. Big down, it's definitely moving away from the channel and forming a new trend. So that's what I would look for with Digital Turbine. Quick look at the data. This is Ortex. The big thing that stands out to me here is this analyst rating section. So 4 buys, 1 hold right now, outstanding as analyst ratings on Digital Turbine. And again, this isn't because analysts actually know where the stock is going, in my opinion. It's more that folks who would tend to track a stock or make buy and sell decisions based on what analysts say, or institutions for that matter who would do that, the degree to which they follow this and then push the price in that direction as sort of like a secondary weird type of confirmation of the analyst rating, that's what we're looking for. So target price 107.60 right now, sitting at 77.86. So that's a nice 34% of upside potential. So really strong opportunities here, as I see it, from the analyst rating, and the potential for retail or institution or a mix of both to move the stock in that direction. All right, well, good luck if you're in this one, or if you end up taking a position in this one. I wish you the best, and appreciate you watching. I will see you in the next video.